All right, let's dive into a really weird day for SoFi stock. If you just looked at the closing price, you think, boring, nothing happened. But trust me, when you peel back the layers, there's a wild story of big money, suspicious timing, and a massive battle between the bulls and the bears. Let's get right into it.
So here's the big question we're trying to answer today. What was really going on with SoFi? The final number tells you one thing, but the moves during the day, and more importantly, the players involved, well, they suggest something way more complicated was happening. We're going to follow the breadcrumbs and see if we can piece this puzzle together.
So at the end of the day, this is the number everybody saw. A tiny, tiny gain of just 0.07%. I mean, you'd look at that and think it was a totally dead day for the stock, right? Just another quiet session. But you would be so wrong. Because hiding behind that little green number was a day full of some pretty big swings. It actually gave investors another chance to buy the dip, which was pretty similar to the day before. But the volume was kind of low, and under that quiet surface, the big institutions were making some really interesting moves. So the key here is that the flat close was basically a total deception.
Okay, so first things first in our investigation, let's look at the wider market. You know, maybe some big economic news could explain why SoFi was acting so strange. Let's take a look.
What's really fascinating here is just how contradictory all this data was. You had the ADP employment numbers. They came in a little soft. The JOLTS job openings, also lower than expected. But then, bam, ISM services comes in hot, way better than expected. So what happens? Well, they all just kind of canceled each other out, leaving the market totally confused with no clear direction.
And the result of all that confusing data? Well, any hope the market had for a January interest rate cut pretty much evaporated. The odds dropped all the way down to just 11.6%. So yeah, this adds a bit of uncertainty to the mix, but it's not the smoking gun we're looking for to explain the specific drama going on with SoFi. All right, so if the big economic data is a dead end, where do we go next? Well, a new lead popped up during the day. A couple of new and very bearish analyst ratings.
Yep, two big names came out swinging with sell ratings. KWB's analyst, Tim, who's got a pretty high success rate, by the way, he slapped a $20 price target on it. And then Bank of America jumps in with a sell rating and a $20.50 target. Now, what's interesting is that the bears usually show up right before earnings, but this feels a little early, and that's our first real red flag.
And this, right here, is where the story gets really bizarre. See, Bank of America had just helped SoFi with a big share issuance. So, why in the world would they turn right around and slap a negative rating on the company right after doing a deal with them? It makes absolutely no sense. It seems totally contradictory, and it's the key that unlocks this whole thing.
Which brings us to the core theory from our source material, a theory that suggests something very deliberate and, as the source puts it, a really sketchy transaction was being pulled off behind the scenes.
Okay, let's walk through this step by step, because you gotta see this. Bank of America helps with this share offering. The price to exercise those shares is set at $27.50. But here's the absolute kicker. On January 2nd, the day this all went down, you could literally just go buy SoFi stock on the open market for less than that. It makes zero financial sense. Why would you ever choose to pay more for something than you have to? And the source draws a pretty blunt conclusion from this totally illogical move. They argue that the only reason to do this, to exercise those options, wasn't to make money. No, it was to intentionally flood the market with more shares, to cause dilution, and to hurt the stock price. Plain and simple.
And this is what the source themselves calls the tinfoil hat theory. The speculation is that Bank of America, with all its connections, could have been doing this to put pressure on the stock, maybe working with or for clients who were shorting SoFi. That is a very serious accusation.
Now look, a big theory like that needs some backup, right? So let's look at some other data points that really paint a picture of SoFi as a true battleground stock. This might give that theory some much-needed context. And wow, this number right here just perfectly illustrates the pressure cooker SoFi is in. That's how many shares are currently being shorted. Over 118 million shares. That is a gigantic amount of money, all betting that this stock is going to go down.
And here's another sketchy little detail the source points out. There's a weird discrepancy in the data. The number of shares that are officially loaned out is actually less than the number of shares being reported as shorted. Now that's a potential red flag for something called naked shorting, which is an illegal practice where you sell shares short without even borrowing them first. It can be used to artificially hammer a stock's price.
And even when you look at the options market, you can see this tug of war playing out. Yeah, the bulls, they technically won the day with 54% of the bets being calls. But look at that. A huge 46% were puts. Those are bearish bets that the stock is going to fall. And get this, most of that bearish action happened in the first half of the day.
But hey, don't think for a second this was a one-sided fight. While the bears were out there making moves, big money was on the other side of that trade, buying up the dip. We saw these massive institutional buy orders come through, including a $42.3 million block and even a $5.8 million buy in a dark pool, which is a private exchange for huge trades. So for every seller, there was a very, very determined buyer.
So, with all this drama, all this chaos happening behind the ticker, what do the charts actually tell us about what might happen next? Let's switch gears to the technicals and see how this battle is actually shaping up. Okay, here are the lines on the battlefield. The absolute key support level everyone is watching is $26.93. The stock was already flirting with this level after hours. If the bulls want to get back in control, they have to hold that line. And the next big target for them to bust through is that resistance at $27.58.
Now, if you're just looking at the charts, technically speaking, the stock is trading below some key moving averages, which usually suggests it's going to trade sideways for a bit, consolidate. But, and this is a big but, as the source points out, SoFi is one of those stocks where the price action just loves to defy logic. It has a history of these super sharp V-shaped recoveries right when you least expect them.
Which leaves us with this final massive question. You've got a stock that's caught in a death grip between huge short interest and these powerful institutional buyers. You've got a super suspicious transaction and a potential catalyst just around the corner with the big jobs data dropping on Friday. Is that data going to be the push that finally breaks this stalemate? The battle for SoFi is far from over.